Welcome to Wise Beyond Bitcoin, where we cover the crypto neo news, education, and opportunities. My name is Lucas.
My name is Ryan.
And speaking of opportunities, we love to talk about blockchain, crypto, DeFi, decentralized finance, innovation. If you like staying abreast of the latest developments in crypto and blockchain, as well as what's going on in the economy at large and how the macro picture may affect blockchain and crypto, whether it's regulation or leverage risk and margin calls from hedge funds, we like to cover it all, as well as playlists to walk you through DeFi tutorials, how to start crypto, as well as, it's an emerging technology. So what's going on with blockchain and crypto in the world at large? Nations announcing it as a currency, some nations saying this is banned and this is not banned. How do we stay on top of it? Well, I don't know, but we're one of the channels that try to. So if you'd like to stay on top with us, you know what to do. Subscribe, notification bell, thumbs up, and know that none of this is commercial advice, legal advice, financial advice, marital advice, medical advice. It's just educational, entertainment information as we try to understand, research, and share what we learn with those around. We look forward to you dropping comments and sharing what you learn with us, because it's growing so fast. It's emerging everywhere that we can only, stay on top of so much, a little bit at a time. But one of the things that we've been staying on top of for quite some time is the concept of staking, the difference between staking on a proof of stake network for security and staking for a token, a smart contract, and what's that involved with. And this is about staking for securing chains and how you can do that to provide security for strong proof of stake networks and still participate in DeFi protocols that are being built on those networks. So we're talking about increasing liquidity, increasing security, and just adding more dynamic and robust options in crypto and DeFi. In fact, this makes me, as we talk about this, pull up another website that we show all the time.
Map of zones, yeah.
Because it's pertinent to what we're about to talk about with this new dApp built on Secret Network. And what do we love about Secret Network? In fact, if you'd like to stay abreast of what's going on with Secret Network, that is a blockchain, a protocol that we absolutely like to stay on top of and keep you up to date with the latest developments, because of it being at the forefront in crypto and blockchain and DeFi and more. What makes it so unique and innovative?
Well, it's the only smart contract blockchain that has privacy at the forefront. So it's like the Monero of Ethereum's.
And there's already totally, and there's already, it's not just in theory, it's been around for many, many years, and it's integrated into, did I not click map of zones? It's integrated into the IBC and very interoperable, very decentralized, very much potential for growth when you see how many other blockchains it's already connected to and working with. But as a privacy layer, it allows for many of these other IBC blockchains to interact and move to a more private ledger.
Right. That's right. So the IBC is a ecosystem in crypto based on a certain programming language, the Cosmos Tendermint protocol, and it makes it to where these are all separate blockchains, but they're all, because they're built on that similar language, they can be they're very much in communication with each other. So you can take assets from one chain to another, do an IBC bridge that is a direct link from one to the other, and it gets around the need for trusted third parties or centralized exchanges to handle the transfer. It all can be done out of your Kepler wallet. So this is true DeFi.
Okay, so true DeFi, true blockchain, crypto, OG stuff. What's going on? We've talked about the concept of let me get ahead of myself here, of
liquid staking,
derivatives, liquid staking, derivatives, same thing. And let's talk about what service are they providing? What is that? What does somebody normally are they faced with when they come to Secret Network or any of those other proof of stake chains? They're faced with an alternative. You can take
Right.
Atom, you can take Juno, Osmo, Secret, you can take Axelar, you can stake it through the wallet, through Kepler yourself. And when you stake it, you're locking up a portion of that native token, which is necessary. It's like the miners in proof of work networks. Staking, locking up a portion of that is necessary for securing the network. So
Right.
there are staking rewards, just like miners get mining rewards. There are built-in, baked-in rewards, inflation that gets paid out to incentivize the staking, and it gets paid out automatically to all the stakers. So now you've got an option. You've got this native token that you like the network, you'd like to see it grow, but you can either stake it on its network to add security and receive those rewards and wait the 21-day unbonding period when you want to unlock it, or you can stake it through this application. And Selenian network is going to be, it's an application built on Secret, I believe.
They're gonna, yes, it is. They're gonna add other chains later. It's gonna be an IBC hub, but right now it's just on Secret.
Okay, so and what they do is they say, hey, you know what? Lock up, and there are other protocols that are doing this and that will do this. We did a video. We'll do another follow up with Sienna and their lending protocol, and we showed that they have a spot for Shade's staked Secret derivative assets. So we'll see a lot of support for this in Secret. So the idea is to give you an idea, teach you, learn about what this is and why it operates, like how it works.
Let's go back to that trade-off, because I think we need to include the second option. So the first option is, well, there's really three options. The first option is just hold the asset. Let's talk about Secret. You could just hold Secret in your wallet. And that way, and do nothing with it, right? And if you say you see Secret's doubles in price and you want to sell it, you go ahead and do that, right? And you could do it immediately. You can send the Secret. You can take it to an exchange. You can do whatever you want. It's just another token in your wallet. Now, by doing that, you're not going to earn any rewards, right? You're free to use it, but it's not going to be earning you anything. Now, say you're very bullish on Secret, you think, and you want to build a bigger position on it. And so then you could stake it, right? And in doing that, you're going to lose the ability to sell it or trade it or exchange it for whatever that period is. I think it's 21 days for staking, right? Now, so you're going to get a reward. You're going to get some kind of APY out of that, but you're also going to give up your ability to do anything you want with that. It's committed, right? It's been locked up. Now, the other way you could do, the other option up till now was that you would go supply liquidity. You could provide liquidity in a liquidity pool, and you're also giving up your use of that token in that period, and you're going to earn rewards usually in another token, right? And that's providing the liquidity, and that's great because that is how DEXs and AMMs source the liquidity they need to make their exchanges for it to be a place to trade. You need to have liquidity to trade, right? So, so these are either or options. You can either stake it natively in the wallet, or you can provide liquidity to some kind of a DEX or an AMM, some kind of protocol, right? And up till now, these were mutually exclusive, right? So you couldn't, if you staked your Secret, you're not going to be able to put that same Secret in a LP, in a pool, right? It's either one or the other. And if you have some LP tokens, it represents positions that you can't go and stake, right? Because they're committed to the pool. Now with staking derivatives and with liquid staking, it makes it where you can do both of these things, right? So for example, with Selenian, you can stake your Secret on their protocol. They will then issue you staked derivative, a derivative Secret token, which will equal your however much you staked. And that derivative will earn those staking rewards, right? And then you can take that derivative, and then you could go put that up as collateral for a loan, or you could deposit that in a liquidity pool and then earn rewards by providing liquidity. So it's a way to earn two kinds of rewards on the same position. And that's why it's called liquid staking, because it's more fungible than it would be
Yeah.
otherwise.
It's more fungible, but that's, what makes this protocol work is that they tell you that if you'd like to unbond it and receive your secret back, you do have to wait the 21-day period. So there is no magic. They can't short circuit it. What they do say is that you can go to maybe Secret Swap, Sienna, Hydro, Finance, and you can swap at the and swap it for secret. Now, let's say everyone really wants to, there's a bank run, so people are freaking out, like we've seen how in the past, even when it's unnecessary, we'll see people trying to depeg USDT when it's,
Right.
highly collateralized and centralized and has no problem, going to traditional banks and just acquiring more of the liquidity when they need it. It's sitting there. But in other areas, when you look at DeFi and these exits, if you have people running to the exits very quickly, the way the automated market maker pricing mechanism works is that if everyone is moving quickly to cash out on staked secret for actual secret, you will see a depeg, but that is not saying that the protocol is not working. It's actually just showing you a temporary valuation in people's time preference. Really, it's the value of time preference, because it's saying there's a need for secret right now, and I would rather pay $1,000 if secret was worth let's say $10 per secret, and you can only get back $8 or $9. You'd say, well, I'd rather get $8 today than wait for 21 days to get that $10. And that is a normal feature, with time value, time preference, and seeing something go off peg in that kind of a scenario, I think is normal.
Something similar happened to liquid staked ether, right, recently. So yeah, that can happen. And it's a good point that these are derivatives, and they do have liquidity, there are liquidity constraints that come into play when talking about holding the peg and making sure the derivative and the underlying asset are equal. That is a part.
So it's good to know when you see a project like this that say, hey, if you want to come and return and get your secret back, then you're gonna have to wait 21 days. I mean, that's exactly proper, unless you want to go to a DEX and swap it out there, and then you can go that route. So we'll leave this.
Now let's also mention that there's a stable coin that they're launching. It's not out yet. It's going to be called the Cell USD, but it looks like an innovation, or definitely a new form of stable. It's going to be minted based on on-chain collateralized debt. So there has to be some other collateralized debt position before this will mint.
Before we go there,
so that's awesome.
That is awesome. I want to finish this on this article real quick, and I think it's kind of along the same lines anyway. But it's that what Selenian, what they're really trying to build is really a robust, complete DeFi ecosystem. And there's been a lot to learn from the Curves and the Yearns and the Aves and the Bancors and these and the Abracadabras. There's a lot to learn from locking up collateral and using it. And we're seeing the importance of, we've talked about the importance of privacy, and to be able to offer a full suite of DeFi options that we've seen work on Ethereum or EVM chains that we've looked at in practice, and now to see it offered on a blockchain that has privacy, that's more realistic, more practical, I think, for real world application and for finance. Doesn't seem practical to have ledgers open to the public for anyone to be able to look at for specific applications. But I was going to mention that they're not just offering ways to, have liquid secret staking derivatives. They're, like you mentioned, they're also looking at opening up to the other IBC. But the idea is to be able, they want to have a place where you'll be able to leverage some of these tokens as well, and to be able to offer collateralized debt positions and put your D tokens as collateral to the protocol. No, that's exactly what you're talking about, to mint the stable coin. So we're talking about collateralized stable coins that they're issuing as well. And now let me go that you were ahead of me to the article.
Yeah, that's the article I was on.
Yeah.
So I think the collateralized, I mean, think about this. You got stable coins that are backed by collateralized debt positions not in stablecoin terms, but in the terms of the underlying asset, whether it's Secret or Atom or whatever. And of course, I'm sure they'll be over collateralized. So
Sure.
I'm just wondering, are we stumbling into a solution to the decentralization question of how do we get a stable coin that's both decentralized and avoids the kind of the problems, the pitfalls we see with algorithmic pegs, because Lunaterra, that system of minting and burning to maintain a peg, clearly that didn't work out, and it's been tried prior to that before, and it didn't have a good history. So I think there's a lot of searching going on for what's the next mechanism going to be. And this is sort of the direction. I know Shade is also breaking ground in that question. So I'm excited to see answers, and even more excited to see them on a privacy foundation.
So we've done videos. We've talked about Abracadabra. We talk about stable coins and DeFi. Look at this in perspective. Do you think that in Abracadabra, we've talked about the success of MIM? That's a very successful collateralized stablecoin that takes digital assets and locks them up.
Right.
Are we seeing that Selenian is maybe looking to be an abracadabra for the IBC, and that
I think that's fair.
And that the Cell USD would be the MIM, And if you don't know, MIM has not lost its peg, and MIM shows so far. I mean, I look forward, if
it's been resilient.
Yeah, it's been very resilient, and it works. So this is great to see this being built out for the IBC, because we've seen how MIM has done a lot to increase liquidity and growth for DeFi throughout the EVM. So I can just imagine, as this grows and matures, what this can do for the IBC ecosystem.
And they have plans to go cross-chain. They're trying to do interoperability, cross-chain composability on the IBC. So I think Secret Network is just the first. And if that's the case, then you're right. This does seem to be like an abracadabra kind of idea here. Very cool to see it happening.
We'll definitely reach out to them and get someone on the team and talk to them and learn more about what's going on and what they're building, and bring that alfalfa. We'll do our research and definitely bring that alfalfa to the community, because this is a very fun development for the IBC gang, which we like to talk about. Beyond Secret Network, there's a lot of great value in IBC with interoperability and the decentralization, like DYDX we mentioned, which is a layer 2 exchange trading protocol on Ethereum that is now moving over to the IBC for these reasons.
Launching their own blockchain on the IBC.
That's right. There will be a DAO token, SEL, and let's see, there's a tokenomics and airdrop coming soon.
Yeah,
so,
I want to hear more about the airdrop.
We like to talk about opportunities and airdrops, especially if the project looks like it's going to be around for a while. That makes it even better. So you know what to do if you'd like to stay abreast of that. I think we've covered pretty much most of it, except for the fact that I've got this Twitter thread, and I was going to unlocking capital efficiency for the IBC gang. So make sure you give them a follow. And just to reiterate, what that means, it's that capital efficiency. Now, instead of having to choose between, am I going to secure the network, or am I going to engage in liquidity and providing liquidity or growing DeFi? Now I can use this capital both to secure the network and to engage in DeFi. So it's definitely going to allow for a lot more organic growth within the ecosystem without having to depend upon a bunch of outside investment. That's great. And what else? More exciting news from the roadmap. Let's see. We've checked out the article. That's pretty much their latest on the Cell stablecoin. Very exciting news about that, and liquid staking derivatives. So give them a follow. I thought there was one more thing in here.
I want to say that they're coming to Cosmos as well. That'll be the next step, I believe. So Cosmos Atom stakers will have an option on here as well. And anything else you want to touch on?
I think we pretty much covered it. Congratulations to Selenian for what you're building out. I'm excited for what you're doing for the IBC. This is exciting because it's like, if it ain't broke, don't fix it. And this looks like they're taking applications that have been used throughout DeFi and blockchain, and they're bringing it to the IBC, and they're working hard to really bring a whole host of services and products to strengthen it. And look, the reality is that right now, these are the products that are great. The MIMs are great in the worlds of Lunas, and the Aves are great in the what are the other ones? Curves are great in the world of
Compound.
Celsius. Our compounds are great in the world of Celsius debacles and centralized exchanges that lock up people's funds. And so when we see true DeFi, true decentralized projects that are using blockchain technology, that are built on the blockchain, that anyone can access with a Web 3.0 wallet and use, and the risks are transparent. You know, you put up collateral, if the value of the collateral goes down, you know, and if there's DeFi, if there's impermanent loss due to the price or the value of one of these cryptos going up a lot faster or down than the other, then these are natural risks. But beyond that, it's about removing that counterparty risk that is what blockchain, crypto, and DeFi,
and being your own bank, right? Having that power in your own hands.
Absolutely. So this is great because look, we talked about 3 hours capital, and we're going to continue to talk about this. There's no misunderstanding from our perspective that most of the bulk of blockchain and crypto's market cap is built by institutional investment. So when we see that institutional markets are going to be taking a hit, and that there's going to be deleveraging in on the balance sheets and the books of large companies in the traditional market, we see that also being sucked out of blockchain and crypto. And we've seen it happening. It's already happening. And there are hedge funds that are being margin called and having to plummet the prices. But we also see other companies standing by, ready to pick up these digital assets at pennies on the dollar. And that's why take your time to do your research. There's a lot of great opportunity out there. The Selenians, you know, these projects, these applications are looking to help build a strong, robust ecosystem without that intermediary counterparty risk. So look forward to seeing this evolve and grow and what comes out of it. And I think we did cover the bulk of what they are bringing to the table. Of course, if you're with Selenian and there's something we missed or you'd like us to mention next time, drop in the comments. We'll reach out to you and see if we can bring some more alfalfa to the community. But yeah, I think that about covered this one.
I think so.
Well, then until the next time, have a beautiful day, and namaste, y'all.
Thank you.